Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, and we are sitting here now on the 24th of September, 2018, just after 4:40 p.m. Central Daylight Time. Okay, it was like watching paint dry today. We knew that what was going to happen at midnight was the tariffs were going into place. They did. The stock market broke on that. Not in the NASDAQ, but most of the other indices broke down. The dollar did absolutely nothing. You had a bit of a rally in the euro. I'm not going to say it's a very strong rally of 10 points. And the British pound, of course, just floundering because do we have a Brexit? Are we going to still have Miss May around? I mean, there's just so much infighting. One of the slaps in the face on the president was this monster move in the energies. You know, he's calling on OPEC to increase production. Well, guess what? They didn't. This was the weekend meeting. And you went up $2.40 in the Brent. I think this is a 4-year high. So, remember all that money we're spending on everybody's defense? Mr. President, I'd like to hear what you have to think about that. As we go to the weekly area chart of closes for the S&P, the highest close we recently had was 29.34. We're 9 points away from it. So, yeah, the market's down 8.5 today, but as you can see, it's still a pretty strong market. You can see how the market had a correction, and now it's trying to break down a little bit. In other words, it made a new all-time high, closed lower on Friday. You're getting a little follow-through. I'd only get nervous if you got under 28.8350. That would break the pattern of higher lows, higher highs. Don't know that anything on this chart is going to be bearish, but that would get me nervous. When I look at where the support is, look at the 18-day average of closes in red. That's what I think the support is. When I look for resistance, you got up to the upper Bollinger Band on both Thursday and Friday, and you're backing off from it. So I'm still going to say the bias is up, the trend is up, and if you look at momentum, you're overbought, and guess what? It's starting to turn down. So this market's got a setup here where it wouldn't be surprising if it pulls back to that 18-day average to figure out what to do. As of this moment, it cannot embed, which means changing the momentum from overbought to locking in an uptrend, not doing it right here. In the NASDAQ, you have a pattern of a higher high and a lower low. I'm going to call that trendless. The market has been fighting for a very long period against this 18-day average of closes, and as it's been doing so, the black dashed lines, which are called Bollinger Bands, think of this as resistance and support as projected by that algorithm, they are not narrowing in much, but they're just going sideways. It's a market that I'm going to say is without trend at the moment. The strongest of the markets has been the Dow. It still has the embedded reading. But the market is finally, if you take a look on Friday, you were up and over the upper Bollinger Band. Day before, Thursday, over the upper Bollinger Band. Over the upper Bollinger Band on Wednesday. And if we go over to Tuesday, you weren't. So what you had is 3 days in a row over the upper Bollinger Band. When I get successive days over it, I count each one as 1 percentage point of the 5% of times the market will be over a band or under them. So I had 1, 2, 3. The odds were today coming in 2% chance of staying over that number. That is not a trend change, but it tells me if I were long, be on the lookout for a correction. How deep? That's what we use the slow stochastics for. The slow stochastics, until the red line turns under 80, the market is still being bought, in my opinion, by the pros. Turn that under 80, and I think price and the 18-day average may well make a run at each other. The Russell has got the out-and-out bear pattern. Yeah, hard to believe. But lower highs, lower lows. Where's the support? Each time we've hit the lower Bollinger Band, that has been where the support has shown up. The resistance all of a sudden, it's so strange to be talking the word resistance in stock indices, is up at 1725. You'd have to take out 1731.30 to break this pattern. You are not oversold. So if the market wants to push through these lows, it's possible that the 100-day average could come into play. In the VIX, one of the things I had mentioned last week is I thought the pros were going to sell this market short. In other words, sell puts if you hit the 18-day average, looking for the market to retrace towards the 100-day, the 18-day, the red line. Not too bad so far. It's falling into that part of it. We'll see what happens. In the T-bonds, in fact, in the T-bonds and the notes, the hardest thing, and one of the things I teach traders is, when you have a major report coming out, why are you playing into the market? The market's already, to a degree, I think you'd agree, disagree, or don't disagree, has discounted what the Fed's going to do. It's raised real rates in the 30-year area. Okay, is it to sell the rumor, buy the fact? Are you playing that they're going to do a surprise and hike more, that you can get more out of it? Or is the easier money come out of the market? That's probably the case. You do have the embedded reading, so as a technician, forget that rule. You still have lower highs, lower lows of bear market. I can't forget my rules, and I stay with them. I don't look for problems where I don't have to find them. 10-year note, bearish as can be, embedded reading, it's the same thing. If these markets want to break, the lower Bollinger Band again. TLT, lower highs, lower lows, still bearish. Got to take out 117.30 to break the pattern. If we look at the momentum, both numbers are still under 20, and they've been that way for days. Lose that, and then I'll argue that price and the 18-day average might start making a run at each other. Dollar index, getting a bounce away from the lower Bollinger Band. It is a market that is trying to break out to the downside. Now, if we look at the momentum plays here, both numbers today are under 20. Both numbers were under 20 on Friday. They were not on Thursday. Tomorrow's a key day. If you're going to get an embedded reading, you've got to keep that down. We'll find out if it can do it. And as you can imagine, you can get a flip-flop, and let me come back here on some of the others. Here's the euro. I hit the wrong button there. You've got the higher lows, higher highs. So you went to the upper Bollinger Band on Thursday and Friday. You're backing off to the 100-day average. You are overbought going into an FOMC meeting. In the British pound, no trend. What we did is during this run-up that we had the embedded reading in place, and I think I was pretty clear here saying if the market can go, maybe it makes a run because it was running already on the upper Bollinger Band to the 100-day average, got up and over it on Thursday, came apart on Friday, and you're just sort of hanging right here. This is what you call whipsaws now. Momentum's been lost in the market. It's got to restructure itself. Japanese yen with an embedded reading, with people not putting on, if you will, risk aversion trades, this has pressure on it. And this market continues on its way to the downside. This is called riding the lower Bollinger Band. It's still very bearish. In Bitcoin, if you watch TikTok in the morning, not watch, I'm on Bloomberg TikTok, so if you go on it, you'll hear me. At about 8 o'clock, my report will be out. Right now, what I'm seeing is a neutral market caught in these Bollinger Bands that are very sideways. It appears that there's a group in Congress now that is taking up the measure with legislation to try to get rules to control these crypto exchanges and the like. That is the first sign as to how you get something going. You can't have the Wild West in these things. And it's back and forth, void of a trend, as I'll call it right now. As you saw today, the Brent versus WTI crude. Of course, we heard Iran threaten at the UN, the U.S. again. If we do anything with their exports of oil, there will be blah, blah to pay. Okay. So we've got a market that came back after a narrowing in of the spread, as you can see, to the resistance of the 18-day average, moving average of closes, and that's where I think you're sitting right now. Now, when we look at the market, we had been in a bull trend, and we're trying to break out to the upside. We are overbought. I say that this challenge and up and over it, you got to be very careful of. It's rare that you stay over those Bollinger Bands. When you come to WTI crude, our blend, same thing in an overbought market in an uptrend. Do we get further fire, if you will, out of this or not? Can't answer that, but there's nothing bearish on these charts. other than they're overbought. Uptrend over the upper Bollinger Band. So this, one thing I teach is you do not add to positions over Bollinger Bands, and I won't change that. Here you got a lower low and a higher high. Remember what I told you, this trade caught the traders? I won't change what I'm saying. This was such a bearish setup in the papers. They were all talking weather's going to stay warm. We got this funny part of the year we're just going to build. Well, here you are back to 302, the upper Bollinger Band. Want to remind you, this coming Thursday, I'm going to hold my live webinar. Now, there'll be an email, if you're on my email list, sent to you in the morning by me. Respond, fill out the form. When you get your confirmation back, it'll have the password in it. Got that? That's where the password is located. It's an invitation only. If you're not on my list, or you know you're not on my list, you might want to give my staff a call at 866-973-2077. It's going to begin at 1 p.m. Central Daylight Time. They typically last anywhere from a half hour to 45 minutes. You bring your questions. I do my best to answer it. If you miss it, it will be on our website. The problem is it's free to attend. I have a fee if you watch the recording of it on the website. Why not attend? I'm Ira Epstein. You have a great day. I'll talk to you all tomorrow.